In the quiet hum of global markets, a storm is forming. One that begins not in the trading floors of New York or London, but in the silent movement of a currency that has ruled the world for nearly a century, the US dollar. And in 2025, its rising strength carries consequences far deeper, far darker, and far more dramatic than most investors are prepared to face. For generations, the dollar has been more than paper and ink. It has been trust, power, a promise that in the chaos of financial storms, one currency would remain standing. But every rise carries a cost, and every strengthening dollar sends shockwaves across the world, shockwaves that eventually reach one place we all care about: the stock market. Yet the true story begins decades earlier, long before traders began watching the DXY charts, and long before governments warned of global uncertainty. It begins in the years when America emerged as the world's financial superpower. After World War II, when global economies lay in ruins, one currency stepped into the vacuum. Backed by unmatched industrial strength and political influence, the US dollar became the backbone of global trade. Oil, gold, international loans, everything was priced in dollars. And slowly, the world's dependence grew. But dependence builds vulnerability. When the dollar rises, nations feel it. Corporations feel it. And in 2025, the pressure is mounting again. This is where our story turns, because a strong dollar is not just a number on a chart, it is a force that shapes markets, shifts wealth, and changes the fate of entire industries. And behind every movement of the dollar lies a chain reaction. As the dollar strengthens, foreign currencies weaken, and when they weaken, companies that earn revenue overseas suddenly face a silent thief. Imagine a tech giant generating billions across Asia and Europe. Those earnings in weaker local currencies shrink when converted back into a stronger dollar. €1 billion today becomes far less valuable tomorrow. Profits fall, forecasts drop, and investors panic. In 2025, this scenario is becoming real again. The first whispers came from multinational companies, warnings hidden in quarterly reports, subtle phrases like currency headwinds and exchange rate pressures. Then came the analysts, raising concerns about sectors most exposed: technology, consumer goods, pharmaceuticals. Industries that rely on global sales. Industries that once thrived on worldwide expansion, now threatened by the very currency of their home country. But the story doesn't end there. A stronger dollar also reshapes global capital flows. As interest rates stabilize in the US, investors around the world begin pulling their money home. Dollar-denominated bonds become more attractive, offering safety and reliable returns. And when investors seek safety, stock markets, especially emerging markets, suffer. In the shadows of this financial shift lies a mystery many overlook. Why does a dollar rise at moments when the world feels uncertain? Because fear has a currency, and its name is the dollar. Whenever global tension rises, political conflicts, recessions, wars, investors rush toward the currency they trust most. And every time they do, the dollar climbs higher, tightening its grip around global markets. This psychological force, the fear-driven demand for safety, becomes one of the strongest engines behind the dollar's ascent. And in 2025, fear is abundant. Geopolitical tensions, inflation debates, unstable commodities, unexpected elections. The world is on edge. But in every story, there comes a twist. Because a strong dollar is not universally destructive. It rewards some while punishing others. Think about domestic companies, the ones that source their materials and sell their products primarily within the US for them. A strong dollar is a gift. The cost of importing raw materials from other countries drops, making production cheaper. This boosts their profit margins, making them more attractive to investors looking for winners in a challenging market. Simultaneously, US consumers find their purchasing power has increased. That trip to Europe you've been dreaming of, it just got cheaper. Imported goods, from luxury cars to everyday electronics, also become more affordable. This can fuel domestic spending, providing a lifeline to the retail sector and creating pockets of economic strength, even as the broader market struggles. So, the dollar's rise creates a two-track economy, one where global giants face headwinds, and another where domestic-focused businesses find a sudden advantage. This brings us to the most critical question for every investor watching this unfold in 2025. Where is the opportunity? The answer isn't to run from the market, but to understand its new rules. The strong dollar acts like a filter, separating vulnerable companies from resilient ones. Investors begin a massive reallocation of capital. Money flows out of multinational corporations with heavy international exposure and into domestic champions. Small cap stocks, often overlooked during periods of global growth, suddenly become the heroes of the hour. Companies in sectors like regional banking, utilities, and US-based manufacturing start to outperform. The stock market becomes a chessboard, where the winning strategy is no longer about betting on global expansion, but on domestic stability. The smart money isn't just looking at earnings reports. It's looking at where those earnings come from. A company earning 90% of its revenue in the US is suddenly a safer bet than a tech darling earning 60% of its revenue abroad. This is the Great Rotation, a silent but powerful shift happening beneath the surface of the headlines. It is a moment where deep understanding of currency dynamics becomes the key to unlocking hidden value. However, a perpetually rising dollar is unsustainable. A dollar too strong for too long can start to choke off the very global economy it depends on. It can trigger debt crises in emerging markets that borrowed in dollars. And it can eventually harm the US itself by making its exports too expensive, leading to a widening trade deficit. History teaches us that currency cycles always turn. The Federal Reserve, foreign central banks, and governments will eventually have to act. They might intervene in currency markets or adjust interest rate policies to curb the dollar's strength. So, while the current trend points to a powerful dollar in 2025, the savvy investor knows this is just one chapter in a much longer story. The key is not to predict the exact peak, but to remain adaptable. The current environment rewards a focus on domestic strength, but as the cycle turns, the advantage will shift back to global players. The companies that are suffering today could become the biggest bargains of tomorrow once the dollar begins to weaken. The real skill is recognizing these turning points before the rest of the market does. As we navigate this complex landscape, one thing is clear. The dollar is more than just a currency. It's a barometer of global fear, a driver of market rotation, and a force that creates both winners and losers. Understanding its power is no longer optional. It's essential for anyone looking to protect and grow their wealth in the years ahead. The storm is here. For American consumers, 2025 has a silver lining. As the dollar climbs, the world becomes a giant marketplace on sale. That new smartphone you've been eyeing, cheaper. The imported car you've always wanted, more affordable. Even the cost of your next vacation to Europe or Japan suddenly drops. Industries that rely on these trends are thriving. Retailers see costs go down. Airlines and transportation companies benefit from lower fuel prices and increased international travel. For them, a strong dollar isn't just a headline. It's a direct boost to their bottom line. But this story has two sides. While one part of the economy celebrates, another is feeling the squeeze. For America's exporters, the picture is far from rosy. Imagine you run a factory that makes high-tech machinery. For years, you've had steady orders from clients in Germany, China, and Brazil. But now, with a powerful dollar, your machines are suddenly 10, 15, even 20% more expensive for them. What happens next is predictable. The phone calls slow down. New orders dry up. Suddenly, you're forced to make tough decisions. Do you cut prices and sacrifice your profit margin? Do you reduce production and risk laying off skilled workers? This isn't a hypothetical scenario. For thousands of US companies that depend on overseas sales, this is the reality of 2025. From agriculture to advanced manufacturing, the strong dollar is a formidable headwind, turning a competitive edge into an uphill battle. This clash creates the central economic drama of our time. It's a tug-of-war, where the dollar's strength will ultimately decide which sectors rise and which fall. Investors are on the edge of their seats, trying to read the tea leaves. Where should they put their money? Which stocks can weather this storm, and which are destined to crumble under the pressure. The easy answers are disappearing. The obvious winners, like importers, seem clear. But what about the hidden losers? A multinational tech company with huge sales in Asia might suddenly see its earnings report disappoint. Not because its products are bad, but simply because the currency exchange rate is working against it. The invisible hand of the currency market is reshaping fortunes, and Wall Street is scrambling to keep up. So, where are the safe havens? And where are the traps? Let's break it down. Energy companies might actually feel a sense of relief. A strong dollar often helps stabilize volatile commodity prices, bringing a bit of predictability to a notoriously unpredictable sector. The financial industry, particularly big banks, could also see benefits. A strong dollar attracts foreign capital, with investors from around the world looking to park their money in the perceived safety of the US market. This influx of cash is like a shot in the arm for the banking system. But the list of potential losers is long and growing. Exporters and manufacturers are on the front lines, facing a direct hit to their sales. But think bigger. Even global software giants and entertainment companies, which earn a huge portion of their revenue overseas, will see those foreign profits shrink when converted back into powerful dollars. Their battle isn't with a competitor. It's with a number on a screen, the foreign exchange rate. Just when you think the story is only about corporate winners and losers, the plot thickens. The global chess masters, the central banks, step onto the stage. A US dollar that grows too strong for too long doesn't just hurt American exporters. It destabilizes the entire global economy. Many developing countries have debts denominated in dollars. As the dollar strengthens, their debt burden becomes heavier overnight, pushing them closer to a potential crisis. The world can't just sit back and watch. So, what do? Foreign central banks might start intervening directly in currency markets, selling dollars to weaken its value. Nations might adjust their own interest rate policies, trying to make their currencies more attractive. Trade policies, once set in stone, could be revisited. Every announcement, every press conference, every whispered rumor from a central banker becomes a major event. It's a high-stakes game of strategy, where each move by one player forces a reaction from all the others. And where is all this drama amplified? On the trading floors of Wall Street. Here, the reaction is not measured in months or weeks, but in microseconds. Sophisticated algorithms, designed by teams of mathematicians and programmers, are constantly scanning the news. A headline about a central bank intervention triggers a massive wave of automated selling. A slightly better than expected economic report sparks a frenzy of buying. The emotional heartbeat of the market grows louder, faster, and more erratic. The volatility index, often called the fear gauge, starts ticking upward. For the human traders still in the game, it's a nerve-wracking experience. They are glued to their screens, trying to anticipate the next move in this global chess match, knowing that a fortune can be made or lost in the blink of an eye. The cool, rational logic of investing gives way to the raw, primal emotions of fear and greed. By the middle of 2025, the impact is undeniable and clear to everyone, not just the experts. The stock prices of large, global companies are on a roll. One day, a company like Apple or Coca-Cola might rise on good news from its US operations, only to fall the next day because of currency headwinds in its international markets. Emerging markets, which were once the darlings of investors seeking high growth, are now facing a capital exodus. Money is flowing out of countries like Brazil, Turkey, and South Africa and rushing into so-called safe haven. Asset-US treasury bonds, the Japanese yen, and gold. This isn't just an adjustment, it's a fundamental shift in global risk appetite. And through it all, a crucial truth becomes crystal clear. A lesson the financial world has had to learn time and time again. The dollar is UNT, just a neutral tool for measuring value. It has the power to create value, to destroy it, and to move it across borders with breathtaking speed. The real power of the dollar isn't in what it is, but in what it does. As we journey deeper into the year, the story of the strong dollar evolves from a simple economic trend into something much more profound. It becomes a measure of global confidence. When the dollar is strong, it signifies that investors around the world trust the stability and security of the US economy above all others. But when that pulse of confidence quickens, when the dollar rises too fast, the stock market reacts like a living organism. It breathes in, it breathes out, it expands with optimism, it contracts with fear, it shifts and rides with every beat of the global financial heart. For short-term traders, this volatility is an opportunity, a mystery to be solved for profit. For long-term investors, the strategy has to evolve. They can no longer just bet on good companies. They have to bet on good companies that can withstand the powerful currents of the currency market. In the end, what is this all really about? The story of a strong dollar is the story of global psychology. It's about the collective hopes and fears of billions of people, all distilled into a single currency. It's about trust in institutions, risk appetite in the face of uncertainty, and the timeless human ambition to protect and grow wealth. As long as the US dollar remains the world's ultimate safe haven, its movements will continue to cast a long, complex shadow across stock prices, bond yields, and commodity markets. It's shaping our world in ways we are only now beginning to fully grasp. The rise of the dollar in 2025 isn't just a financial event. It's a defining chapter in our interconnected global story, and its ripples will be felt for years to come. Thank you so much for watching. If you found this breakdown helpful, don't forget to hit that like button, subscribe to the channel, and ring the notification bell so you never miss an update on the economic trends shaping our world. What are your thoughts on the strong dollar? Let me know in the comments below. See you in the next video.